Thank you. UK shares dropped on Wednesday morning following falls in Asian and US markets. The Nikkei in Japan was down by more than 4%, and the markets in South Korea and Hong Kong were also trading lower. The AI tech giant Nvidia has been hit particularly hard, falling by more than 9% and wiping nearly $300 billion off its stock market valuation. Let's get more on this now with Muhammed Demir. He's the head of capital markets at Swiss Finance Corporation. Thank you for joining us here on BBC News. So what do we make of this? How significant is this drop across global markets?
Actually, the drop came after a big rally in the last 2-3 years in the stock markets. So when we look at, especially in the case of Nvidia, the stock value went up almost 1,000% in the last 3 years. So what we can say is that there's a healthy correction. And unfortunately, the problem was the investors hoped too much from this AI frenzy in the recent years. What we can see in the market is that a lot of technology companies are investing in AI products. However, the return on investment hasn't materialized yet. So that made the investors question how long this huge AI spending will continue, because the way Nvidia was being priced was as if in the future everyone will use artificial intelligence, computers, phones, and all of the chips will almost be made by Nvidia, which cannot be the case, obviously. We have seen the examples of this problem back in the day with the dot-com bubble as well. Everyone used to buy anything that has anything to do with internet companies, whereas we've seen that most of these companies didn't perform as expected, and most of these ideas didn't come to fruition either.
So is this a slight warning that the AI bubble is starting to, if not burst, slightly deflate?
Well, it can burst at any time, because when we look at the Nvidia stock itself, the market cap is $3 trillion. As I said, 3 years ago only, it was $300 billion. So that means the price is inflated $2.7 trillion, which is bigger than some countries, European countries, most of the countries, GDP actually, even maybe bigger than almost same as UK GDP, the whole economy. So we can easily say that this price is quite inflated. And on average, we see Nvidia moving at least 5% a day. And just last month, we have seen Nvidia coming down 27%, which was almost around close to $1 trillion in terms of market value. And when we say market value, we calculate all of these market values with the share's last price. However, when you look at the fair value of these shares, you need to look into last 1 year, 2 year, or 3 years average purchase price of these shares. And it looks like there is 30 to 40% more downside potential on this company. Okay. Having said that, the other technology companies are following this because, as I mentioned, it's not all about how much Nvidia sells. It's all about how much Nvidia's customers are making money with their investments, billions of dollars of investments. So we haven't seen any results of that yet.
Okay, so, Mohammed Demir, I'm sorry, we are out of time. We will have to leave it there. Really good to talk to you. Thank you so much for your time. Mohammed Demir, Head of Capital Markets at Swiss Finance Corporation. Around the world and across the UK, this is BBC News.